How we doing, sir?
There we are.
There we are. Look at
that. I want to address the elephant in the room. This guy's got the fancy shirt. I don't have any fancy shirts, and I'm wondering what that's all about.
That's okay. You're rocking the deep V, and that's.
I have about 120 of these of the different colors. Every one.
Okay.
It works. I roll with it.
All right, share your screen for us. Show us your charts.
Yeah, let me share here. Screen. There we go.
There we go. We got it. All right.
Well,
tell us what we're looking at here.
I'm on the Bitcoin chart right now.
Okay.
Last time I talked to you guys, we were down in this area right here waiting for a recovery of some kind. And obviously, anyone who's into crypto, into Bitcoin, obviously has noticed that we've totally changed directions. And this is something that I called out on my Twitter. One of my main strategies when it comes to trading, when it comes to swing trading, is identifying harmonic patterns on bigger time scales. And this is a 4-hour chart here, and this structure right here is a bullish harmonic. It's shaped like an M. Anyone who was here last week, this week I'm trying not to get into the strategy as much as I did last time. I want to talk charts. I want to talk trades. I want to give you guys some stuff that's actionable. And this is one of them. This is one of the ones I brought up on my Twitter. But anyway, it's a bullish harmonic. This is a bullish Gartley. And with bullish harmonics, you generally get this M shape. And your entry is going to be right here. It's an XABCD pattern. You start out, the X is going to be the bottom of the first impulse up to the A. You got the B, which is going to be this area, your first swing low off the first impulse. You got the C, and then the D. And this is something we identified on Twitter not that long after I did a show with you guys last week. And the D point is going to be your entry, generally speaking. A lot of the times with bullish harmonics, you'll get an initial reaction at this D point, and then it comes down and you get a confirmation low that basically says, hey, we found the bottom here. We retested it here. And as a swing trader, that's where you're going to want to enter. You want to make sure that this is valid. One of the ways we discussed it last week is using the MACD or the RSI to identify not only the end of the formation, but a bullish divergence in the trend, which means basically from this C point, we're coming down with the price action. And then down here on the MACD, we identify that the momentum at this point, which is right up about here, and this point, which is our D, which would be the PCZ of this harmonic formation, you can see the momentum is waning. It's reducing. There's not as much negative pressure trying to bring this price down, which would tell anyone looking for an edge to get into a trade on Bitcoin or any asset. This might be a point where the price action is going to make a turn. And as you can see, at this D point, after we identified bullish divergence on the MACD, the RSI has bullish divergence too. This is more of a continuation divergence though, Class C bullish divergence. It basically says we're going to continue this trend we've been on. And I mean, anyone who's been following Bitcoin, you could tell we're on a hell of a bull trend. We have been, this year specifically is big for Bitcoin because it's It's a 4 hour, I mean, not a 4 hour, I'm sorry, 4 year trend when they do the halvening of the Bitcoin supply. So generally speaking, this is a bullish year for Bitcoin, and we're in a bullish trend. And we have support from the oscillator saying that we were going to continue that trend. The MACD was implying that we were going to stop this downtrend that we've had going on. And this is something I put up on my Twitter. If anyone follows me, it's Trade Nomadic on Twitter. But you can see right at this point, we never got a confirmation low. We're in such a bull trend when it comes to Bitcoin. The supply shortage is a factor as well. And you can see right from this D point, it's just been up and up and up and up. I've made some targets here. I think eventually, whether it's a straight shot to it, or we cool off a little bit, come down, maybe retest some of these highs we've had previously as we came down on this harmonic trend. Eventually, I believe, it's not trading advice, but it's something I believe in. I believe our next target's going to be up around 72,000. I think my number was like 71.80 pennies when comparable to, the ultimate trend that we're in. But I've got a lot of interesting plays this week, and this week I did come bearing gifts. Somebody asked me last week if there was some kind of indicator that could help them identify these patterns, and I did come up with one that I like. It's not perfect, it's all algorithmic, but if you're in TradingView, if you're in Benzinga and you type in Harmonic Patterns, you're going to see this second one here. I'm not sure what the rest of it is, but it starts out, Lonesome is the guy who wrote this script. If you add that to your chart, it'll identify stuff like this. This is a bullish Gartley formation, a little bit off, but it's a bullish Gartley formation, and the idea of it is once you get this first spring up, and then you get this retrace, which would be down to the 618. If you're familiar with Fibonacci, it would be the 618. And then you're going to get a second swing high up here, which it is going to ultimately give you, if you're trying to identify a harmonic, it's something that you can look out for. Once you see this first impulse up, you see this impulse down to the 618, the retrace, that's when I would start looking for this D leg. Whether it plays out or not is a whole different story, but it's something, it's just one more edge that you can kind of keep an eye out for if you're trying to identify harmonics. And the D point, ultimately, when you get down here, is going to be where you'd want to enter the trade. That alone isn't enough for me. If you guys were here last week, I want to take into consideration every variable that comes with this trade, right? At this D point, we also had the bullish divergence on the MACD, and this is on a 4-hour chart. When it comes to harmonics, generally swing trading alike, I like to stick with the 4-hour and the daily charts, because with swing trading, you're looking for a longer move. You're not looking for, hey, can I scalp a few dollars here and then change my position by the end of the day or within the week. This is something that's going to usher in a massive trend, whichever direction that it's implying. And on Bitcoin, this was an uptrend. This is something I've been sitting here waiting for. I've been waiting. I'm not the type of person that really tries to get ahead of the trades. I want everything to agree with, what I'm seeing, my philosophy. And in this case, we had the MACD implying, this is, this trend coming down is changing. Same thing with the RSI. And as you can see, this played out pretty well. This was our first target over here at the B point. But when it comes to the textbook targets for bullish Gartley, you're going to be looking for C, which we've hit. A, which is going to be about 61.5. That would be our next target. Now, it's not necessarily going to be a straight line there, but if you get a proper entry, which is something that I teach, I've got a group of friends, local traders that I teach this stuff to. If you get in at the proper time, you don't got to worry about all this mess in between, and that's the beauty in swing trading, right? I can set my trade up. And with any trade, I like to go for at least 3-to-1 reward to risk. All this stuff in the middle doesn't matter, because I would set my stop loss underneath this D point with a little bit of room, for volatile markets, for news that might drive the market in the direction that kind of invalidates all this stuff. I'll give it a little bit of room to breathe. But as far as swing trading goes, I've got all this. This is just, it's just profit. It's just static in between my entry point and where I'm going with this. So it doesn't really matter to me. But ultimately, one of the targets of the bullish Gartley is going to be this 1618 Fibonacci. And if you're not familiar with Fibonacci, the way I ran this is from the X point to the A point, and it's going to bring you up in this area. With harmonic patterns on these time scales, I always set up my trade in pieces, right? When we get to this point, I'll take some profit. I'll take some profit up between the A and the C. And then ultimately, the home run Casey Stubbs target is going to be this, whether it's the 1414, the golden ratio, or the 1618 with a bullish Gartley, which is confluent with this other target I've had in the past, which is going to bring us eventually to 71,800. And nothing's changed my mind about this since I entered here. But my whole philosophy between setting targets and stop losses is, if I'm entering this trade because I believe this harmonic pattern between the oscillators is going to play out, if it falls underneath D, well, that kind of invalidates my entire thought process behind the trade. And not to say that I can't re-enter this trade. Say we broke below D and ended up finding support at one of these other historical levels, I would still re-enter the trade when we get back up here, because 84% of your trades, 84% of your good trades that fall below your stop loss and end up coming up and re-entering your initial trade zone with your same trade variables, 84% of them trades are going to end up playing out and being profitable for you in the long run. Whether it happens the first time or whether it doesn't, the stop loss is going to get you out because initially your trade was invalidated. And if you can get in at a lower point with support from other variables like the oscillators, or whatever it be, that's going to give you an even better edge than entering where you were, and it's going to eliminate the risk. Say something happened outside of the normal variables that would make this trade equitable, it's going to get you out. You've got your money, you've got your cash on the sideline ready to go. So if you do find another entry that makes sense, you're ready to go. You minimalized your loss, and that's the beauty in swing trading when you have a good entry like this. Because if I enter here, there's only so much room for my calculations to go wrong, right? If I enter here with confirmation, obviously from my little laundry list of variables that I like to look at, I've only got so much room before I get stopped out. So if I lose, a couple percent on this trade because it was invalidated, it takes all the emotion out of it. I don't have to think about it. I don't have to question, hey, how long am I going to wait before I get out? I don't want to deal with that. Like, the guy before me was saying, swing trading works great for people who don't have time to look at the screen all day. We're looking for big moves. I'm not looking to make a couple bucks here and there. I'm looking for a big move, and that's why I use 4-hour daily charts. I'll look at weekly charts for confirmation. For scanning, I start with a 4-hour. I look to the daily to confirm what I'm seeing on the 4-hour chart. And if I want to add to it, I'll go to the weekly. And if the 4-hour, the daily, and the weekly chart are all telling me we're looking for higher prices, well, that's a trade I want to take. But this week I want to do it a little bit different. Last week, admittedly, I kind of slacked a little bit when it came to the chat. And that's something I want to do this week a little bit different. So anyone who has a ticker they want me to look at before I get out of here tonight, I'm going to add all these tickers to my watch list specifically for this stream. And I'll try to catch as much as I can at the end of the stream. And if there's anything I don't catch, I'll add it on my Twitter. I'll add a chart, something that kind of goes along with it. If we get a lot of them today, what I'll do is I'll go through them quick. I'll analyze a chart just from what I see real quick. And if there's something I want to add to it, I'll go ahead, I'll drop it on my Twitter. But again, nothing I'm going through today, nothing I'm looking at. This is not advice for trading. That's not something I'm going to give you. All I do is read the charts. And ultimately, with swing trading, the more variables you got that agree with your sentiment, the better. Obviously, Bitcoin's an easy one. This is something that if I was wrong here, if I didn't have a stop loss, I'm okay with it because Bitcoin's been in a massive bull trend. And so far, there's nothing here that has told me otherwise. So if I end up, losing a few bucks, I get stuck with, an entry on Bitcoin that isn't favorable to me, I can always dollar cost average. If I see another point that seems like a bottom, I can average my way down. And ultimately, when it does turn around, it's in a bull trend, I'm in a better position. My cost basis is lower. So I got in the chat here, I think this one's for me. I got Fubo, I got AI, Baba's one I looked at the other day. I'm going to toss this on here. Just so I give you guys some value here. I'm going to go through a few trades that I've personally been looking at just real quick, and I'll tell you why I've been looking at them. And at the end here, I'll go through these trades quick. If I don't get to all of them, again, I'm going to put it on Twitter and try to give you guys some value, some actionable plays here, some trade action, and we'll go from there. But another one, Palantir. Palantir is another one somebody brought up, I think last week. And we initially had this bullish harmonic on the left here. And if you look, I got these red lines lined up with historical support. And with harmonics, that's what you want to look for. If you get a D leg of a harmonic, you kind of want this to be at an area that is historically important, right? Because a harmonic in most cases is a reversal formation. This harmonic is developing while we're on this downtrend, and D would be the reversal leg of it. And if you look right here, and if you look right here on Palantir, those are both historical areas of support and resistance, and that's where the D leg ended. So that gives it a little more credibility. And obviously the oscillators is very tough to see, but we have this bullish divergence here, which shows that the MACD is coming down while the price action was coming up, which would make this hidden bullish divergence. It's more of a continuation pattern than a reversal pattern. But you could see we got this reaction. This little scam wick came down, hit the D point of the harmonic, and came just straight shot right up here, and then came back down. And that brings me into a whole different pattern completely, because this whole structure, including the harmonic, is now formed what's called a bullish dragon harmonic. And if we zoom in here a little bit, you could see we retraced from this point here. The C, this is part of the bullish dragon harmonic. The other one ended right here. This comes down, and we've got this area where the price action's coming down a little bit. If you look down here at the RSI, I can zoom up. The RSI is gaining strength, right? We bottomed out here, and by the time we get to this point, we're moving up. It means this asset's gaining more relative strength to the market. Same thing with the MACD. The MACD's got all this negative momentum, but when you get over to this point, the negative momentum has waned down so much. But if you look at the price action, it's different. Price action was still trying to make a lower low, which is the opposite of your oscillators, which is telling you that this price action coming down is changing. Oscillators changed before the price action did. And if you look at this D point, we're starting to see a reaction. And that's what you want to look for. ZYNE, I'll put that one on there. It's just one more variable that gives credibility to my thought process that Palantir is going to make a change. The price action has been coming down, but that's about to change according to the oscillators here. And I've got these price targets based on Palantir. My price targets on these are based on the candle formations. You see at this C point, we've got a double top. As soon as we hit this point, we got this big bearish engulfing candle coming down. So what that tells me is traders set up that point in the price action to take some profit. So my first profit target is going to be just underneath that top, because we very well may come up to this point and then retrace. That doesn't mean the trade's over in my book. That's why I've got these other targets, because what we could do is if this price action comes up, again, profits taken, we might come down, retest this area, which we've already done once. We've got, the initial reaction. We've got a confirmation low, which means, yeah, this was support. We retested it as support, and here we go. So, well, now I'm just zigzagging all over. But at that point, I've got these other targets, and with harmonics, there's always specific targets, but it doesn't necessarily mean you're gonna reach all of them. So that's why I usually, if I'm confident we're at least going to hit this C target, I'll take, a certain percentage of my shares out of this trade to secure it. Because if we hit this target and then bounce under my stop loss, I don't want to walk out of this trade, with nothing to show. And sometimes, not always, it depends on the trade. Sometimes after we hit this first target, I'll move my stop losses up, just so I hold on to everything I've gotten out of this first target. But I've got these other ones here, and with this bullish harmonic specifically, my target's going to be this the 618 retrace. But I set up my target over here because if you look to the left, which is always important, historical historical data on an asset is always important. That's where I always get my support and resistance trend lines or horizontal lines from. But if you look right here, we've got another double top. Same thing right here. You've got this this price action right here that comes down right here. You get kind of a double bottom. It tried to make it, tried to make some positive price action here, and it just got rejected. But we've got this close right here. And if you look with my target, that's where I'm at. Always want to look at the price action correlation because it gives you an idea of how the candles, how the price action is going to react to certain areas on this chart. And if you look right here, at this point, it was a straight shot all the way down here. So obviously this is an important zone. That's an area that traders before historically took profit. So that's where I'm going to take profit. Like I said, I like setting this stuff up because no trade, no matter what, is 100%. You could have every bullish variable telling you something's going to happen, whether it's, news, whether it's just market sentiment. All that stuff can derail a perfect trade. And that's why with swing trading, I like to take what I can get when I can get it. And, these higher targets, will it reach it eventually? I think so personally, but I'm putting my money on, some of these lower targets first. And if I hit this first target and start to, move up to the next target, if I had the confidence in the trade, I'll add, I can add a little bit to my position, adjust my stop loss if I needed to, and just go with it. On a 4-hour chart, on a daily chart, you got more time to think. You got more time to adjust. You've got more time to react. And that's what I like about swing trading, especially if you're busy, if you're working, whatever the case is. It gives you more security. It gives you more time, and it gives you, in my opinion, it gives you better odds to coming out successful in a trade. One little mistake isn't going to mess up this trade. This is stuff that you're looking from C, March 15th, to D. You had 2 weeks. 2 weeks to, analyze your next step, to decide what you're going to do next. Before I spend too much time on Palantir, I'm going to go to another one. Do you have time frames associated with those price targets? Jennifer, not always. When I do time frames, I start on a 4-hour because that's one of the quicker time frames I like to deal with when it comes to swing trading. I'll even move to shorter time frames just to find an entry, but 4-hour, that's where I want to be at. As far as, how long do I anticipate this trade taking to hit my targets? That's not something you can always forecast, but if you look at the price action correlation with these price targets. And it's part of the reason why I like this trade. It's because it's straight up, straight down, straight up, straight down. You know, this is an asset that, and you want to find an asset that reflects price action with your time frame. So if you're like, you know, I only want to stay in a trade for a couple weeks, look at the historical information of the asset. You know, if you're looking at a stock that moves slowly, that, you know, it takes its time anywhere it's going, then obviously you're going to have to set your time frame accordingly. With this one, that's something I took into consideration. You hit certain zones, straight up, straight down, straight up, straight down. And with every asset, it's going to be different. And listen, I've set up trades that, like any other trade, I got impatient on. Unfortunately, this market is designed to reward people who are patient. If you're confident in a trade, let it go. If you're not, if you think there's a place you can put your money that is going to bring you a reward quicker than a certain asset, then by all means. But this is one I'm confident in. I've liked Palantir for a long time. This is actually one that originally caught my attention from Pre-Market Prep, another show Benzinga runs in the mornings, one I've been watching for years. And I've been following along ever since. ETH, that one's on the list. I'm going to go over Ethereum too. And while I'm on that topic, let me bounce out of this one to Nikola's another one. This formation right here, which is, the context is perfect. With harmonics, a lot of the times a bullish harmonic is a reversal pattern. You've got this huge downtrend coming. You start to get some attention on this swing low, which ends up being your X. You've got a swing high up to A, back down to B, C, and then D would be your entry point. That's when this harmonic is completed. And if you look, you don't even have a lot of closing action down in this area. You just got this pin bar scam wick coming down to D, hitting it and reacting. First thing I see immediately, you got this double bottom, come up a little bit. You've got, oops, you've got your initial test, which if you, there it is. If you look, that X point, or I mean, I'm sorry, that D point is historically support. Some of the, you know, historical information about this asset tells you that that should be a support area. And guess what happened? If you look at D, we tested it once. Just like I talked about earlier, you've got a confirmation. You tested it once, yeah, that's still support from back here. Now you've got a retest that tells you, yet again, that's still a support area. That's a good place to set a stop underneath it. And that's what I did here with Nikola. With the butterfly pattern, if you want to go by textbook, you've got C. The C point of the XABCD is going to be a pattern. I mean, not a pattern. That's going to be a target to take profit. And instead of setting my take profit right at the top of C, I looked over here. Well, actually, I didn't. I should have, but I didn't. But if you look over here, just under C, you've got this double top. On a 4-hour chart, that's important. That shows you that even though we wicked above that double top a little bit, twice, that's where we close. That's, an important area to look out for. So that's where I would set my target. Even though it's below C, I think that's an important place to set up a target. And with swing trading, I would rather take my profit when I've got my profit than let this trade come back down and get stopped out. The second point on Nikola that I'm going to take profit, same thing. If you look at the price action from X to B, it's basically just straight down. So instead of setting my target at the very top of A, I have it down here a little bit where you've got these bearish engulfing candles that just drop the price action, that pulls the rug right out from under you. So I would rather get out with my profit instead of trying to get this little bit at that point. Now, if I was going to add another price target to Nikola, I would again refer to the price action. Before we got to X, where'd we come from? Look at this. It's straight down. We stopped a little bit in here, a little bit of chop here. But if you look, that kind of aligns with the top of A. So I might leave a little bit in this trade and try to get, a third target on Nikola up here. If you want to get into it, I mean, you could follow the stream all the way up to here. This point at 27.22 might be a good area too. But I'm not looking for home runs with swing trading. I'm looking for something that I can rely on. I would rather take, got 15%. We're risking 5% on this trade. And then you got 24%. That's 5-1. With swing trading, I like to stick with 3-1. It gives me 3 times the reward to 1-time risk. And basically that means that I can enter into 3 trades and be wrong twice, and I'm still in the game. I didn't lose. If that one trade is getting me something like 5-1 and I lost 2 out of 3 trades, well, I'm still well above where I was. And that's what I want. I'm not looking for every single nickel and dime I can get. Do you tend to penalty years ago about BTC? BTC, that I'm biased when it comes to Bitcoin because I wouldn't say a maximalist by any means, because I'm in a lot of altcoin trades right now. Ethereum is one of them. And I'm only in them. I'm not in them because I believe in the project. I'm not in them because I think, a year from now they're going to be Amazon. I'm in them because there's a trade opportunity, and that's the strategy I teach. And a lot of people that are in this swing trading, it's people that are in my group, they're losing money because they don't know when to get out, or they don't, whether it's on the upside. They're like, oh, I made this much, but I could make more if I waited. And you're right. You could always make more, but it's a numbers game. My strategy, at least, right? I could wait for Nikola to come all the way back up here. And mind you, after this plays out, after I've secured my trade, which I'm trading on this harmonic, which my targets are C and A. After this trade, if I still see this bullish trend taking me to higher levels, I'm going to look for an edge, somewhere where I've got defined support, resistance, and I might add to it. I might try to swing, and on some trades, I'll set up 4 targets. I might try to swing for these upper areas, but I want an edge. I always want an area that says, hey, we've got support, like this double bottom here. We've got support here. If it falls underneath that support, then my whole theory about this trade is gone. So that's a great area. If I can get in right at one of these double bottoms, or the D point of a harmonic, I know that if it comes underneath this D point, I was wrong. And I don't lose that much because I'm in right where all these things are telling me to get in. So if it's wrong, if I lose, whatever, a couple percent compared to how much I could have made, I'm still good. And it's a numbers game. If all my trades are 3-1, I only got to be right once. Out of 3 times, you go 4-1 or 5-1. Like technically, if you wanted to hit it out of the park with a butterfly harmonic, I'm 5-1. I could be wrong 4 times in a row, and especially if I'm making these type of returns, I'm still good. That's successful, and those odds are great. Another one I'm looking at, Neo. This is another one that's got, this is a dragon formation. You've got this initial rundown. I'll try to go over this while I'm doing it. You got this low right here. Oops. On the way down, you've got these little accumulation points. These bottoms show a little bit of accumulation going on. You come down to, again, the D point is where we wanted to get in for any type of bullish harmonic. Well, let's look at the oscillators. At this very bottom of our negative momentum on the MACD, we're right here. Then we've got this D point, which if you look down at the MACD is another area where the negative momentum was gaining. But look, negative momentum is waning. It's less negative momentum, and the price action is going down. So they disagree with each other, which means that's a divergence area, which means even though the price action is still coming down, negative momentum is saying, hey, we're about to start moving up a little bit. And if you look what happened. Price action came down. As soon as we've got confirmation that this trend is changing, same thing. You get this reaction. Neo is another one that I like because if you look, got a bottom. Oops. And then right after that, if I can get my scribbles out of the way, you've got one bottom, two bottoms. So not only did you get your low at D, but on this 4-hour chart, you had 4, 8, 12 hours to say, hey, we just got a confirmation that that's the bottom. So I set my stop loss underneath that, because if that's the bottom, that's the bottom. If it goes underneath the bottom, I was wrong, which is fine, but you got to get out. And granted, stop losses they'll work against you sometimes. You might get stopped out, and then the price just goes ballistic. And it's especially in the market that we're in right now. That's a common trend. I've gotten shaken out at a few trades in this market because, whether it's volatility, whether it's, other market conditions, news-driven catalysts that drive that price a little bit further than I was comfortable with risking. And then it reverses. I lose. But at the same time, guess what? I didn't lose capital. I didn't have to sit here and say, hey, maybe I'll stay in a little bit longer, because that is a slippery slope and it's not a position you want to be in. When it comes to trading, you want a plan. You want a place, that you're headed to. You want a place that you want to get out. You want all of that stuff to be figured out. Hertz Scrambler, I got Fubo coming up. That's one of the ones we put on the list here. I'm going to get to that real quick before we get out of here. But yeah, with swing trading, that's what you always want to look for. And with Neo, real quick before I get to some of these ones you guys mentioned, Neo, I like this price target specifically. Yeah, it's a historical area, but with Neo, you could probably actually go up to this 236 because of this double top. That's where I would want to take profit, just in case we get to this zone and reject again. We might still keep going after that, and if your stop loss is down here, you could just leave it. But if you wanted to, you could take some profit here and add to it if we retest a lower level. Second target on this harmonic here would be, this would be your C point, and this would be your B. It's labeled different because this is another harmonic. It's a huge harmonic pattern. So what I would do with my C point is same thing. I could go right up to the top, but I feel more comfortable because of this wick here, because of this wick here. I want to get out a little bit below where everyone else might be looking at, or where traditionally textbook that would be a target. I want to get out a little bit early. I'd rather take my 26% with a 3% risk. I'm out. I don't got to think about it. I don't got to worry about it. I don't have to, be up Tuesday afternoon, wake up in the morning tomorrow and have lost that. I'm already out. If there's another entry, I can get on top of it with my profit secured, and that's what I like. I'd rather take a bunch of small, good decisions and just compound the money that way. It's a lot safer. It ends up being a lot more profitable, in my experience at least. Before I start drawing any more weird designs on my chart, let me look at Fubo, because that's one that a couple of you guys brought up, and this is one I don't have charted out. I was in Fubo earlier in the year, I think the end of last year too. So this is going to be new territory to me, but look at this. And mind you, I told you guys about, if you want a harmonic scanner, go to the indicator strategy on TradingView on Benzinga Pro, which I'd fully recommend, by the way. Type in Harmonic Patterns, and this one right here, the writer of this script is Lonesome the something, but I like that one. That not only will identify some of these patterns, but it'll give you some targets too to look at. So Fubo, this is a deep crab, and it's coming off a reversal, this big downtrend. So that's good. I like that. We got A, B, C, D, and this is early. This is good. Whoever picked this one, you guys, I don't know if you noticed, but that's going to be a good trade, because you're right down here at the PCZ, the pattern completion zone. So if I was going to set up a trade on Fubo, not advice by any means, I never give advice, I just read these charts, okay? I would set up my long position, or I would have, above D. If it falls underneath D, I'm out, because that's not how harmonics work. I'm not taking chances. My thought, I'm making a trade based on this harmonic. So if it goes beneath D, I'm either wrong or, market conditions. I don't know what's going to happen underneath here. And if you look at Fubo, which this is another good aspect about this trade, you've got historically resistance and support, and look where that is, right at the pattern completion zone, which makes sense. You want that. If it's going to reverse, why would it not reverse at the pattern completion? I mean, not why would it not reverse at historical support or resistance? That makes sense. So that makes this trade that much more credible in my book, but we're not done. If I was looking for targets, you could swing out of the park all the way up here at C. But I'm looking at, you got this kind of choppy zone right here. I would probably set a target at this bearish engulfing candle coming down. I would not stop there. I'm going to look price action correlation. Chop up here. So let's set price target at the 618, which is one of my favorite areas for a retrace. Your golden zone on Fibonacci retrace is going to be your 382 and your 618. This area is the most probable area for a downtrend to retrace. So that's price target 2. I'm going to do you one more, and we're going to go up here. Instead of going to C at this very top, we're going to take our target right here. This bearish engulfing candle, double top area right here, because the price action correlation says at this point, what happened with the price action? Straight down. A little bit of chop, why I've got these other targets. But ultimately, if you look on a daily chart, I'm sure the daily chart says straight down. And that comes to another factor that I haven't brought up on this stream. But you want confirmation from other time other charts or other time scales. So if the 4 hour says something's good, well, let's check the daily, because if the daily says something different, like if this is bullish and the daily says we're running out of juice, and I use the same variables to verify that, but if the daily says we're running out of juice, well, I might not be so optimistic about these higher targets. I have noticed a correlation between Fubo and Bitcoin. I mean, there's a lot of Bitcoin sympathy plays that I go after too. The guys at Benzinga have brought up a few of them today for Bitcoin sympathy plays. I like Mara. I like Riot. Let me see. I've got a few other ones here. But while I got that loading, same thing. We're going to look at the oscillators on Fubo just to confirm this stuff that we're seeing. If we look at the MACD, you got price action coming down. On the MACD here, it's also coming down. Same thing with this island here. If you look over to X, from X to D is coming down, but if you look at X to D on the MACD, it's coming up a little bit. But on top of that, if you look at the MACD, at this PCZ, you would think momentum is going to start getting to the upside. It's going to start getting some positive momentum. Well, look at the MACD. Right at point D, we're losing negative momentum. We move to the RSI. This isn't your standard RSI, but it's still all the same. The RSI here, price action's coming down. The RSI is going up. So that tells you that even though the price is coming down, you are looking at, I can find my right things. The price action's about to turn to the upside. So with Fubo, mind you, I'm not in this trade, but I'll tell you what, I'm going to get in it after this show because I've got a lot of variables that are telling me that we're going to see a change in the price direction of Fubo. Is that gonna happen? I don't know, but you know what? I've got a risk of about 4% if I entered. Actually, let's move this up.
Hey, Trendy Nomadic. Just don't want to cut you off here. I want you to finish your thought,
No, okay, brother.
Just want to let you know that we're coming up on that next show. But go ahead and finish what you're
I'm with it because I'm wrapping up right now. With Fubo, if I set this up, entering right now, I would probably look at, if the momentum has changed, we shouldn't be coming down. So I'm going to set up my stop loss below the wick of the last 4-hour candle, giving me, I might lose 4%, but if I hit my first target, I'm at 20%. It's 5-1. If I do this trade 5 times and I'm wrong 4, I still win. So this is a good trade. And this is something I'll post on my Twitter. If any of you guys want to follow me, I'm going to go through. I'll add these other ones you guys brought up onto my Twitter tonight. And again, it's not advice. I'm not telling you where to put your money, what to trade, but I'm telling you that these variables say upside.
There we go.
I appreciate you guys coming through. Anyone who came back from last week, again, hit the like button. Give me a little bit of credit so we can keep this show going. And check out the rest of the guys on Benzinga. Benzinga has always been one of my favorite places to go for news, for trading, for everything. It's a one-stop shop.
There we go. And hey, we haven't met before, but my name's Rohan. I'm a producer here at Benzinga. Jameson, good to meet you. Thank you so much for providing this amazing content over here. Folks, definitely got to drop a like for Jameson because he's out here dropping the knowledge. All right.